If you're a gold trader and don't want to miss this move, then this strategy is exactly what you need. Many people just see a trend line here and have no idea how to interpret or trade it. Today we'll take a look at how you can trade these moves, whether you're into scalping or swing trading. And if you enjoy videos like this, go ahead and leave a like and subscribe for free. So, what do we need for this strategy? As you can see, I've already drawn a trend line here. This is point 1. This trend line needs to have at least 2 points of contact, but 3 is even better. And once this trend line is broken, that's the point where things get really interesting. That's when we switch to a smaller time frame and can start trading from there, whether it's scalping or swing trading. And please don't forget that all of this, of course, also needs to happen in line with the trend. I'll zoom out a bit here, and you can clearly see that the chart is moving in a downward direction, consistently forming lower lows. Right now, it's just made a small retest upwards, basically a little swing up, but as we've seen, the last few candles have brought significant downward pressure again, so we can assume that the chart wants to go even lower. And this is how the strategy works. We have a trend line, we wait for it to be clearly broken. Not just a little bit or maybe or sort of, no. It has to be broken clearly and then we wait for it to be retested. As soon as it gets retested, we take a closer look at the whole thing on a smaller time frame, specifically on the 5-minute chart. We can now see that we reacted perfectly to the trend line up here, and in this case, we even have a really great order block to the left side. And of course, we can mark out this order block again and make use of it. That means here we have a 5-minute order block. From there, we can trade the whole thing to the short side. But what we need to keep in mind here, the trend line, of course, does not mean that the chart will turn exactly at this trend line and then run continuously to the short side. Naturally, we also have to look at the entire chart. It already went quite far down, and now we have a sideways phase here, which we discussed in the last video. By now, you're familiar with the AMD setup. Above here, we now have liquidity sitting just above this area. You can see this quite clearly with all these wicks here. Just remember, sideways phases, when candles move side by side for a long time, create liquidity above and below. In this case, we have to consider that the chart might move up here again. Does it have to? No, but we should definitely be prepared for it. That means we now need to see what it's planning to do here. 5-minute order block. Now we need a confirmation candle. That's the next step. Let's take a look at how it all looks. The next candle looked more than good. We can use that one for our entry. Now let's move on to the scalping entry. The scalping entry is right after this candle here, a nice 5-minute engulfing candle. What does that mean? The previous candle was completely taken out by this single move. That means the candle closed clearly below here, not just below the last candle, but also below the one before that. So a nice short entry here for our trade. So we place our stop loss above the last candle, here above the high, and in terms of risk reward, we aim for a 1-to-1 ratio, because remember, for now we're only looking at the scalping trade. This is not yet the entry for the swing trade, because for that we definitely need to use a larger stop loss. I think that's clear so far, so that would be the plan for now. I'll just let it play through quickly, and in this case it worked out perfectly, the price moved down, and from this point on, the chart could find support again. Now we've made a nice trade here. 1-to-1, that would be the scalping trade. So to summarize briefly, we go to the 1-hour chart, draw our trend line there with at least 3 points of contact. Then we wait for this trend line to be broken, wait for the retest, switch to the smaller time frame and see if we can possibly find an order block. It's not a must, so it's not mandatory, but in this case it worked out great here. And then, of course, we wait for a confirmation candle. Then, with a 1-to-1 risk-reward ratio, boom, we've defined our trade here based on the major trend and our entry in the scalping area. And if you want to try out this strategy now, of course, we also need a really awesome broker. For that, I recommend Vantage here. I've been with them for over 6 years now. It's still one of the best brokers with the lowest spreads, lowest fees, and you even get 50% on your first deposit. So feel free to check it out. You'll find the link in the video description. Now, a lot of people say, yeah, okay, that's all well and good, but why can't we just let this thing keep running short? Because the trend line was clearly broken here. We even have a retest. And now we could just let the trade run nicely downwards here, right? Yeah, that's actually not a bad thought if that's what you're thinking right now. But there's one big but. The trend line only tells us that this area here is roughly our resistance level, okay? That means the chart could just as well move along here for a while and only then go short. Do you understand? It doesn't mean that it has to give us the perfect entry exactly at the line. Let go of this perfectionism. There's no place for that in trading. And since we just talked about the fact that there's still liquidity above here, theoretically we would have to set our stop loss this wide for the swing entry now. If we still define this as a swing entry, our stop loss would at least have to be above here, but even that wouldn't be enough. So where do we put it now? And it's always quite easy to look and see, okay, where is the next resistance level if this one down here gets broken? And we can see very clearly that up here we have another order block. So I would also include this order block here and simply place the stop loss above it. Now we have our entry for the swing trade. And as you can see, swing trading, of course, also means that the position can run for much longer. So we know, yes, perfect, the stop loss is placed really well there. I'll just let this run for a moment here. Let's take a look at how the chart moved. It came back up here and took out the liquidity on the left side. So you could even say, yes, this was my scalping entry here. Yes, so first this scalping entry here with the 1-to-1, and then you could say, perfect, if it also took out the liquidity according to my plan afterwards, let's look again for a nice bearish candle here that also reacted there. Stop loss above, either above the candle or above the wick up there, and make sure we also take a 1-to-1 here. And you see it would have worked here once again. And for the swing trade, you could have taken either this or that entry and placed your stop loss up here above this order block. Because from this whole area, that's the perfect point, I would say, where the chart could still breathe and then still move in your direction. That means, you see, this is how you should look at it here. But if you really don't like looking for these entries here in the smaller time frame, then we'll take another look at it in the larger time frame in a moment. But first, okay, now we have our swing trade here. In the end, it doesn't matter which one. I'll just go with the first one now. Let's stick with that. So where is our take profit now? Let's just do a 1-to-1 here as well. And in this case, we can now switch to the larger time frame and define our take profit. Because 1-to-1 is all well and good, but here we can expect a bigger move. That means we jump back into the 1-hour chart. And here we have our trend line again, which has now been broken. And now we need to define a take profit. And we can do that very, very easily. We just look at the wicks here at their most recent lows. We mark those for ourselves. Sometimes they don't get fully taken out, so you can go a little bit above it. You don't have to take the exact bottom of the wick, just go a little higher. It could be that all the liquidity has already been taken out above that, but in any case, we can define an area here for our take profit. That means we have one here. Now let's move further to the left and we'll do the same thing here. We look here. Ah, perfect. There's a wick. Then there's another one here and another one here. You see, okay, this way we have areas where we could theoretically let the trade run to. What you shouldn't do is always go for the maximum trade saying, yeah, this thing will definitely go all the way down here. No, so stop doing that. Don't always go straight for the maximum on the largest time frame. We don't need to overdo it here, okay? Important point. Otherwise, you'll end up waiting forever. Instead, you could look for more trading opportunities in the end. That means we're staying realistic here. But these areas here look very good. If we take a closer look here, we can also see that a lot of orders have come in here. That means if all of these get taken out here, I think it's a pretty good point to set our take profit. And now the great thing is, we can go back to the smaller time frame, since we've already found our entry here. We've also set our stop loss, and now we already know, aha, theoretically, this would be our first take profit. Now we see 0.9. Well, we don't like that, so let's keep looking. So the minimum TP would be here, around 1.45. That would already be very, very good. Or we can just let the whole thing run all the way down. Let's hope the whole thing works out. All the way down, the risk reward here would be about 2.3. That definitely works, and let's see how the chart has developed now. Remember, this is now an intraday swing trade, you could say. That means it can take a little while for the chart to possibly reach our take profit. Here we've now reached the first take profit. And this one really took its time as well. But that's completely normal. Yes, if you want to trade this way. Swing trades and so on just take a bit longer. Now we've reached the second take profit, and you can see right here, before I let it run all the way through, you can immediately see reactions here. That means these are really important points that we're marking here, where you can also take some profits. You don't have to let the entire trade run through like that. And up here as well, we can see that this area was also interesting for the chart. That's where things initially moved back up again, so please don't underestimate that. I'll go ahead and let it run a bit further. Let's see how far the chart went here. Here again, it tested the area once more, and again a few buyers came in, but now it finally managed to break through to the downside. And as soon as it managed that, you can see it continues to follow the trend downward, going short. And why is that? Well, because we're operating here on a very large time frame. Now it has reached the take profit and the maximum take profit. Boom. It will probably go even lower, but in the end, we don't care about that. We've defined our maximum take profit and ultimately reached it. And just to complete this briefly, let's switch over to the 1 hour chart. Of course, you could also trade this based on the 1 hour chart. It's a bit easier. You don't have to go into the 5-minute chart, but your entry will of course be noticeably worse as a result. If we take a look now, we had this breakout to the downside here, then the retest above, and here we're doing nothing different, just like in the smaller time frame, where we say we wait for a really nice bearish candle, and that was clearly this candle here. Stop loss above the candle, and then in terms of risk reward, either 1-to-1 or you let the whole thing run longer if you want. But you can see, even just with a nice bearish 1 hour candle, you can trade the whole thing here. The important thing is that all of this only works after a trendline break here, or in this case, it was a break and retest. You can't just assume that after every bearish engulfing candle, another one will immediately follow. That's not the case. So you do need to trade all of this with a bit of a plan, but we've already discussed that here in detail. And if you want to learn more about order block trading, then our VIP community is just right for you, because we trade order blocks there every day. That means you'll get a strategy you can use to trade every day. Feel free to check it out. We have over 100 members there. You'll find the link in the video description. So that means we're done for today. I hope you enjoyed it. If you did, drop a like, subscribe, and see ya. Take care. Bye.